All right, guys, here we go. Right quick, we're going to take a look at the natural gas futures, and this chart here will determine, when we get in and start playing, for example, UNG or Boyle. And number one, a couple of factors, for the bears currently, we are far and away from the 20, and then even time-wise, we haven't hit the 20 or traded around it since, the 1st of December. And the further away you are, both in time and distance, higher the odds, higher probability you're going to get, at least a little bit of a oversold bounce, rally, short covering, rally, that sort of deal. And then this gray dash line here is a significant price move. Our Patreon members know why that is such. And that level is around 217, possibly get a wick down to a flat $2. So that's what we'll be looking for. And then we will take advantage of that on our UNG or Boyle chart, because it's the same time we're very, overextended below the 20, number one, number two, even the 8 exponential well below it. And then far as time, let's see, November, last time we got even close, and then we actually touched it the last time in September of 2022. So yeah, it's been very hammered down, very oversold. So that's going to be, to our advantage. And then we look at Bull. Last time we touched it right here. Let's see. Yeah, September 22. And one of the things, absolutes in trading, believe it or not, is when the 20 and the 200 come together, 100% of the time they separate. Price will drop, 20 will follow it because it's a lagging indicator, or price will pop up to the upside. As you see here, that was one of our, factors for getting in here, back in the day in April 2021. And anyway, that's another story. You always want two or more factors, reasons to take a position. Okay, we just don't look at a thought or not look. We just don't want to feel something or think something. We want to see hard data, at least two hard data pieces that give us higher odds, higher probability that, yeah, we are going to be running a little bit higher. And then next we're going to be looking at oil futures. Yeah, right now we're short oil on the micro futures here, and possibly looking for a little bit of support down there at this low pivot zone. Also, there's another reason, but we'll get into that later. But anyway, the WTI, how we will take our position to go long the futures. We're looking for a price hit of this 200 simple week moving average, the purple line, also the blue line, our second factor. We have several low pivot, high pivot consolidation zones here that were significant, price levels where, the institutions started getting on board. So yeah, that's what we're looking for here. And then not only will the price hit this, but also we'll wait for a key, reversal signal to then go long oil on our futures chart here, for that reversal. And we're expecting it might not take until spring, but we're expecting a nice run in oil in the spring. And like most people will be crying at the pumps, but we're going to be crying for joy all the way to the bank here as this thing runs up, because we're, be taking advantage of those future markets. Very, small, the little capital risk, capital in the market for pretty good returns, quite honestly. But okay, guys, thanks for watching. Give us a follow on Twitter, and check out our description information below, and we will see you on the charts.